Is it a good time to invest in stocks? Our next guest thinks so. Stephen Wood, Chief Market Strategist at Russell Investments, where he helps manage over $170 billion. Of course, Adam and Scarlett here as well. Steve, always good to see you, sir. I know that you've got a fairly bullish view on the earnings expectations for this quarter and for the full year, and that plays into your view on where stocks are going.
Yeah, I think so. We've had a year, I don't know if it's a relief rally. I mean, a year ago, the market was wrong. The markets are efficient, but they can be wrong, and they priced in something that didn't happen, that cascading organ failure where financial markets would forever seize up and we wouldn't come out of it. So I think we've seen a rather significant correction of forecast rally, not a relief rally. And I think going forward, I think earnings do okay. Year on year are going to look pretty good, and I think from a lower base, I think we grind forwards. So it's a semi-bullish perspective.
We're looking at Alcoa's shares up more than 60% over the last year, which does raise this question. Even if earnings are improving, are stocks really cheap?
I think right now you're getting close to reasonably valued. I wouldn't make the argument that they're cheap, especially year on year. They're certainly not screaming bargains. And in fixed income space and in credit space a year ago, and in you and I think we're talking pretty close a year ago, table pounding perspective from Russell was get out of treasuries, and you need to look at corporate bond space, investment grade securities where great yields, great spreads. So I think a lot of those extreme once in a lifetime valuations, I think that's behind us. Going forward, it becomes more of a grind. So if you're looking high single digits on equities as being a bullish perspective, then I guess I'm bullish. But it's going to be tough getting there, but I think you do get there.
So let me ask you, let's say there's someone at home watching who kept the money in the pocket, was scared, and now feeling a little bit better. Can that person jump in at this point?
I think it depends on what they're trying to accomplish. I think make money. I think those people are probably representative. A lot of asset flows are still going into fixed income, and they're still in safe haven. And a lot of people have really missed, the bond rally and the stock rally. I think if you've got somebody with a longer-term time horizon, somebody that's looking 3, 5, 7, 10 years. They don't really have an option. They need to look at equities. They need to look at global equities in order to diversify a portfolio. So it's not what they feel comfortable doing. It's really their options are limited. They need to generate return for long periods of time. So I think their hand is kind of forced.
What do you think about the deals that have been announced lately? What does that mean about, what does that tell you about what companies think about the rally in stocks?
Well, I think you're seeing a lot of insiders purchasing their own stocks, which is a great indicator. I think you're seeing deals get done. And I think you're seeing companies being purchased. They're pricing. I mean, who would have thought 15, 18 months ago that we would have had even LIBOR price or having commercial paper price, and now you're getting deals and private equity deals are actually pricing. So to me, this is a great sign. So the fact that deals are getting done, you've got visibility, and you've got business people who are making long-term, multi-quarter, multi-year investments based upon their visibility of the data.
So real strategic decisions.
Yeah, that's exactly. That is a very bullish sign in the fact that we are getting good businesses are being purchased by people with smart money. So I think it's a bullish sign. Not every deal is something you want to participate in, but generally it's a good sign.
All right, Steve, thanks for stopping by. Appreciate it. Stephen Wood of Russell Investments.